Welcome to Index Orbit. Today, we are performing an in-depth technical analysis of the Nifty 50. By the end of this video, you will be able to interpret the price action from July 15th, understand key options data like put-call ratio and max pain, and identify critical support and resistance levels for the next trading session. We'll start with a review of what happened in the markets yesterday and then look ahead to July 16th. If you find this analysis helpful, please like this video and subscribe to Index Orbit for daily market updates. For the best trading experience, we recommend using the Dhan trading platform. You can use our referral code EJZZI96380 to get started. Let's dive into the data. Let's look at the core numbers from the July 15th session. The Nifty 50 closed at 24,078.50, which was a minor gain of about 26 points, or 0.1%. While the close looks flat, the day range was quite wide, spanning about 220 points between 24,020 and 24,240. Notice the put-call ratio, or PCR, based on open interest. It stands at 0.78. Typically, a PCR below 1.0 suggests that there is more call writing than put writing, giving the market a mildly bearish to neutral tilt. The max pain level is sitting at 24,100. In options trading, max pain is the strike price, where the most option contracts would expire worthless. It often acts like a magnet for the price, and as you can see, we closed very close to it. Like and subscribe to Index Orbit. Use the Dhan platform for the best trading experience with referral code EJZZI96380. To understand the movement, we need to look at the intraday price action. Nifty opened near 24,073 and spent the morning chopping sideways. Suddenly, we saw a sharp jump in one strong green candle to test the day's high at 24,240. However, the market rejected those highs immediately. Price was slammed back down almost as fast as it went up, hitting a low of 24,020. This was essentially a stop hunt, or a liquidity grab session. The market swept the highs, then swept the lows, trapping traders on both sides before recovering to finish nearly flat. This V-shaped volatility without a sustained trend indicates that smart money was likely clearing out orders before the next big move. Like and subscribe to Index Orbit for more analysis. In institutional trading, we often look for fair value gaps, or FVGs. These are imbalances left behind when price moves too quickly for the market to facilitate trade on both sides. On July 15th, two major gaps were created. First, the sharp up move left a bullish FVG between 24,080 and 24,150. Price is currently sitting right inside this zone, making it a natural magnet for a retest. Second, the sharp sell-off that reversed the move left a bearish FVG between 24,020 and 24,080. Together, these overlap into an equilibrium pocket from 24,020 to 24,150. We expect the price to gravitate within this range before it commits to a clear directional breakout. Until we see a sustained move outside this pocket, the market remains in a state of imbalance. Like and subscribe to Index Orbit. Use Dhan trading platform for best trading experience. Use referral code EJZZZI96380. Now, let's look at the underlying data that drives these price levels by examining the options open interest. The total call open interest stands at 12.05 crore against a put open interest of 9.36 crore. This gives us that put-call ratio of 0.78. Take a look at the bar graph. Notice the significant orange bars at the 24,150 and 24,200 strike prices. This represents heavy call writing. In the options world, heavy call writing acts as a ceiling or a resistance wall, because these sellers are betting that the index will not stay above those levels. On the flip side, we see fresh put writing near 24,050 and the 23,900 to 24,000 zone. These purple bars represent our support cushion. The fact that the call OI is higher than the put OI suggests that sellers are slightly more aggressive on the top side, reinforcing a range-bound view for the upcoming session. To understand the strength of the index, we have to look under the hood at the individual stocks. The heat map for the Nifty 50 shows us exactly who is driving the bus. On the leading side, we saw strong performance from Ultratech Cement, up over 3%, and Eternal, also known as Zomato, up nearly 2.9%. Financial heavyweights like HDFC Life and IndusInd Bank also pushed higher. Generally, the banks, auto, and insurance sectors carried the index on July 15th. However, it wasn't a green day for everyone. Power Grid was the top laggard, dropping 1.78%. JSW Steel and Dr. Reddy's also dragged on the index, alongside major IT names like Infosys and Wipro. This tug-of-war between the banking sector and the IT and metals sectors is exactly why the index finished nearly flat. For a real breakout to happen, we usually need these sectors to align in the same direction. Like and subscribe to Index Orbit. Use the Dhan trading platform for the best trading experience and use the referral code EJZZI96380. Based on the price action and the data we've just analyzed, let's map out the key levels you need to watch for the July 16th session. On the upside, our first major hurdle is 24,150. If we clear that, the 24,200 to 24,240 zone is a massive resistance wall. This is where the heaviest fresh call open interest is sitting and where the market was rejected yesterday. Beyond that, 24,320 is the next target. On the downside, we have immediate support at 24,050. Below that lies the 24,000 psychological level. If 24,000 breaks decisively with high volume, we could see a quick slide down toward 23,884, which is a recent swing low and a major support level. The global backdrop heading into the session is broadly supportive. The S&P 500 is up, and more importantly, the India VIX is down sharply by over 4%. A falling VIX usually signals a risk-on environment. Additionally, a weaker US dollar index is generally friendly for emerging markets like India. These cues might provide a slight bullish tailwind at the open. Please like and subscribe to Index Orbit. Use the Dhan trading platform for the best trading experience, and use referral code EJZZI96380. Now, let's look at the 3 potential scenarios for today's session. Being prepared for every outcome is what separates professional traders from gamblers. The first scenario is a bullish breakout. This triggers if the price can stay above the 24,150 to 24,200 resistance zone. If this happens, our targets are 24,280 and potentially 24,440. However, be careful. Do not chase the move. Wait for a confirmed breakout followed by a successful retest of the 24,200 level before entering a long position. The second, and most likely scenario, is a range-bound session. Given the low volatility, or IV, the market will likely oscillate between 24,000 and 24,200. The strategy here is mean reversion, selling near the top of the range at 24,200 and buying near the support at 24,200. Finally, the bearish breakdown. This is triggered if the price breaks and holds below the 24,000 psychological level. If it breaks decisively with high volume, we could slide toward 23,884. Without that volume, any dip below 24,000 might just be another trap. Like and subscribe to Index Orbit. Use Dhan trading platform for best trading experience. Use referral code EJZZZ. So, what is the most likely outcome for July 16th? When we combine all our data points, the price sitting inside that unresolved FVG pocket, max pain sitting right at the spot price of 24,100, and the heavy call writing at 24,200, the evidence points toward a range-bound to mildly positive session. We expect the Nifty to oscillate roughly between 24,000 and 24,200. There is a very high probability of the index drifting toward the 24,100 max pain level by the close, as options expiry flows take over. A clean break of 24,200 is unlikely without a fresh, unexpected catalyst. On the flip side, a clean break of 24,000 would be the only reason to look for a slide toward 23,884.70. That wraps up our analysis for today. Remember, Trading involves significant risk, and this analysis is for educational purposes only and not financial advice. If you enjoyed this deep dive, please hit the like button and subscribe to Index Orbit. For the best charting and trading experience, including the candlestick and open interest tools we use today, sign up for Dhan. Use the referral code EJZZI96380 to support the channel. Trade safe, and we will see you in the next market update.